Okay, good morning, good afternoon, good evening, everyone. This is a market review for today, October 10th, 2025. So this is Friday, the last day of the week, and we have had a very, very interesting day today. Now, I want to talk about the reasons which I believe are very, very important to know why the market had this beautiful drop today. And no, it does not have anything to do with news. Now, when it comes to news or the worldwide environment, like Trump tweeting or kaboom dropping somewhere else, I believe that they are just excuses for price to drive where it was supposed to drive anyways. Okay, but if the market is going to go to a certain point anyways, and you have on top of that, you have the kaboom dropping somewhere or some president tweeting something, I think that's just gonna give him a little extra push. But I'm gonna tell you that I was waiting for a drop like this. Now, not that big of the drop that we saw today. Okay, so this is why I believe that the little news or the little kaboom or whatever it is that they may say happened was a little push or the extra push for the delivery that was supposed to happen anyways to happen. Okay, so now we are getting a little conspiranoic right away, so don't listen to that. Okay, so if you don't believe that, it's fine. I am going to be explaining in this video how to delete that. Okay, I'm gonna cut that part out of the video. If you don't want to believe that, that is totally fine. Okay, it's totally fine. I am not saying it was just because of one reason and just because of the other reason. I'm saying those two reasons together is what is causing this. But the first reason was going to happen regardless of the news. Okay, and I'm going to be explaining in this video how you could have anticipated this drop to take place today just from an analytical standpoint or from an analytical perspective. So pure price, right? We are not going to be talking about anything crazy, for example, aliens and stuff. So here we go. Let's drop down to the hourly time frame. So to give you a little bit of context, what I was looking at on Tuesday was this drop. Okay, that was beautiful. I'm gonna see if I can show some clips from the live stream that I have with my students. Now, I don't want to share too much because they may get overzealous that I am making public the things they are paying for. But I was basically looking at a drop like this, at least to this low. There we go. So that way everyone knows what I'm looking at. Everyone knows where my attention is residing. These lows right here. Okay. Volume 1, class 1 students know why. And then I'm looking at this CB. And then I had on the crosshairs this one, and this one, all the way towards this little volume imbalance that you can see in here. Okay, this volume imbalance. Now, I share them the execution or the short that took place here. And I share with them the target, the alert that I had here, which ended up being the low of the day. This, we start from here. This was not enough. Okay, so when the market came all the way back and start chopping around, and then the next day on Wednesday, it started to deliver towards the buy side. Now, if we were to see buy side delivery for this day, I was being very, very clear on this day, and I'm also going to try to share the little live streams clip here, in which I am wanting or I am looking for this low to be taken out. Okay, this low right here, this swing low that you have. If we are to deliver towards the buy side, not for a continuation purpose, but instead only for a retracement to this bearish fair value gap and then deliver to the sell side, because and we have these lows. What I'm paying attention to is these lows first. So, still looking down here. Now it could just do this for the rest of the morning and not do anything else, and then in the FOMC news release at 2 p.m. is gonna drop. That's what you could see. Why do I say this was not enough? So, if it is true that we are coming back to the high end of the daily fair value gap, we have just displaced tremendously from a Turo soup or this swing high right here. The market takes this buy side liquidity out, this range. Okay, so it takes the high out, and then it displaces very aggressively towards the sell side. Look at how the market is returning back into this range, okay? This is the first telltale sign. There is many reasons for this. I'm going to be explaining to you a couple of them. But the market is retracing back to the CV in this fashion. Pay attention to the swing low that the market prints right here. So you have a swing low, then you have another swing low that is slightly higher than the first one. See that? Okay, and then you have another one right here. The market takes later, so I'm going to be utilizing this one. And then you finally have another one right here. So this is what's called, or that we understand this as low resistance liquidity run conditions when the market reaches through the sell side, when the market comes back up into this bearish fair value gap. If we are to at least keep pushing higher, I want to see this one being cleaned first. I want to see these lows being taken out first in order for it to deliver towards the buy side, relaxing, okay, like without double thinking, double guessing, without overthinking too much, without looking for this and for that and for the other thing. I was just looking at this low being taken out, at least this one, for us to keep pushing towards the buy side, because I know that there's a chance that the market may want to come back to this range before delivering towards the sell side. So I just kept on calling this low for the whole day. The market just kept pushing higher and higher and higher. And you know that I am a human, so I can make a mistake as well. Either I'm gonna read it wrong, or the market is just going to not give it to me. And that is okay. I am not perfect. I don't have a 100% win rate. Or maybe I am wrong. Maybe it's not gonna go down there. Maybe today is the day in which the market just keeps pulling for the whole day and leaves my sell side down there. It's static. Could happen. Could happen. I could read it wrong sometimes. Maybe it's not gonna come down to them for the whole day. It's just gonna keep pushing, and the FOMC is gonna just make it push higher. That'll be interesting. Very close though. And sometimes it's just not gonna give it to me. It's not gonna give it to me. It's not gonna give it to you. It's just not gonna do what I wanted to see it do. However, the ES did it. The ES did exactly what I wanted to see. So in a sense, I am okay. I am happy with that. The market displaces higher, leaving this first pending target. Now, why do I say this volume imbalance was not enough? What I think of the marketplace in the terms of retracement, because this is what I thought it was, a simple retracement towards this bearish value gap to see lower lows. Why? Because the way that is leaving these swing lows, okay, look at this, the way that is leaving this one to this one super close, and then this one to this one super close, that is very, very, very high probability target, okay? So when the market leaves this on one side, you have to know and to annotate these levels for the rest of the week. Oop, a little sneak peek, something you already know that happened already, right? You have to remember these levels for the rest of the week. I told my students this day on the last stream, I said, I may be wrong today. And I figured out around here, I think it was, and then I started looking for higher prices for the rest of the day because I knew that this level was going to be left. Left what? Left pending. So this is a pending level. Left pending. So you have these highs again. Looking now at this high end of the CV, or the hourly CV, and if you can surpass this one, we're gonna get all the way up until the 25,191. This is the one that I'm paying attention to now. I'm sorry, 1 hour CV, and this is something that I want to be paying attention to. Okay, and this one as well, because what it could happen is the market could overlap this whole thing, and the same way and fashion that it's doing to the buy side could keep doing that until this high right here. This is worrisome. I may be wrong today. Let me see here. That's the other one. It just keeps pulling higher. Beautiful, beautiful, beautiful. Not that it's beautiful for the environment, but it's beautiful for my shorts that are going to take place soon. From this low to this high, the overlap of this range is very, very possible. Pending levels are one of the most powerful things that I have on my repertoire. Okay, this is one of the things that I had delineated and marked on a different chart that you will not see, but I'm telling you how to pick them, so that way you can get your own pending levels. The market is going to remember them because it did not clean the business before delivering towards the buy side. So if we were to keep pushing higher from here, let's say Wednesday was going to be the low of the week. If Wednesday was going to be the low of the week, wanted to see the market come here and here, okay? So take out this liquidity, take out the sell side liquidity out, take this one out, because see this low? Super close to the other one. So why did I tell you this wasn't done? Because it is leaving a swing low super close to another one, okay? And it's not taking it. So this is why this is not done yet. This is not enough. So when the market retraces back to this gap, I wanted to see if it could break lower. So didn't do so. Started calling for longs. I came in later for the news, which ended up being nothing. So I told my students, I am gonna be wrong, okay? I accept the fact that I'm gonna be wrong because I've been on a roll for months. And I understand that if a level doesn't get hit, then that makes me wrong. I said, okay, I'm gonna be wrong if next day until London, we are not gonna get this low. So if Thursday London session, we don't drop during the London session, okay, London, by 5 a.m. in the morning, I wanted to see the sell side. So what do? I come in here and I enter short. How much? 10 contracts. Why? Because I was waiting for a drop. I was waiting for a big drop towards the sell side, okay? And I share this with my supporters. I share this with my students also. That I was looking for a level deep inside the sell side, but what ended up happening is I know that I have to pay myself because I teach you that whenever you're in a trade, and nothing is guaranteed, so you want to be paying yourself in the direction of your target. If you are trading with more than one contract, just please pay yourself, because that's going to put money in your account, that's going to teach you a good habit to have, and also is going to make you feel confident in the long run, okay? So when the market, I enter shorts in here, when the market delivers towards the sell side, so it starts chopping a little bit. This day, I was also looking for a drop, and it kind of made us work for it. But when it finally delivered lower, now again, the ES did exactly what I was looking for the NQ to do again. So let me show you. So here is the ESZ 2025, and the ESZ 2025, again, spend some time up here. My students know what this is. Okay, above the buy side, what happens? Volume 1, class 4, and then it drops, overlapping almost everything that we have created on Wednesday. So it comes all the way down here, and I gave them also this level for the ES when the market was around here. I gave them the targets for the sell side. First, an inversion value gap that I found in here. I'm looking at down there on the ES, see that? This inversion for value gap. And then the delivery to these lows right here, which are very, very close to each other. So what you can see in here, is a swing low close to the previous swing low, another one in here, close to another one in here. You see that? How the market leaves them very close to each other on purpose. This is not random. I have another one and then another one. So the set of swing lows left like this immediately makes me suspicious of these lows. I am not going to be taking along with high probability if I see these lows like this. These are going to be target. These are going to be where my eyes are going to be meandering around. Anytime that I see the market doing something suspicious for the buy side, I'm going, okay. This may be it. The market is going to drop now towards this sell side. So what you have in here is the market taking out this first set of lows, which is what? Not enough. Yeah, you guessed it. The market retraces all the way back up. And when I was on a trade on the NQ, so let me go back to the, well, first, you see how these lows were left, and then what do you see next? Another low being close to this one. Make it a little bit bolder so you can see. So now we have taken this set of lows, but we have left another one super close to this too. So this is not solving the problem. This is not cleaning everything. Now we are free to look all the way all-time highs again. This is, however, engineering more sales liquidity for us to feed off of later. So let me go back to the NQ. So now that I'm on the NQ again, as you saw, these were taken by the ES on this day, but the NQ it wasn't even close to this low. So it just came back to this inversion for value gap like this, and this is ideally where I took my 4 contracts off. I paid myself in here, and I left the rest of the 6 contracts on break even. So the market came all the way back up, took me out in here, and then I knew that if the high of the day was going to be printed, it was either going to be printed here and on here. So I know that I entered a little bit late for the move, but even if I entered earlier, the market was going to still take me out in break even because I know where I was going to enter, and I was going to enter around here. This was meant to be here, okay? But the market was still going to take me out in break even, so I have no hard feelings for your NASDAQ. It is fine. So what do you have later? If the market comes all the way back to this. So what is this specifically? Whenever you have a swing high like this, all right, and this is something I marked in the live stream, for today, all right, I'm gonna go over the 1 minute time frame for today as well. So far you have one of the first reasons and one of the most powerful as to why the market dropped tremendously as it did, which is pending levels. Note this down for you, for your note-taking instruments. When the market leaves pending levels like this and engineers them for days, what you're going to see happening later by the end of the week, it is normally going to be taking place if you have a high impact new on the PM. So we had that on Wednesday, but if that was to happen on Thursday or Friday, then I'm going to be looking for that specific event to take place either on Thursday PM or on Friday AM. So it took place on Friday AM, okay? And I wanted to call this on my live stream, but again, it just chopped during the live stream. I was looking for shorts. I'm gonna share the clip here so I have proof of what I'm saying is true. And my students are also my witnesses that I was looking at lower prices today, and I gave you 2 specific P rates to pay attention to, okay? Then what happens is the market comes all the way back up to this exactly P array. This P array right here is called a rejection block, because when you have a swing high like this, I am looking at the highest body candle closing price. So this closing price right here for the 7 p.m. candlestick right here on the 1 hour time frame is the one that I'm extended to the right. Okay, so let me go down now to the 5 minutes time frame. Okay, this is the 5 minutes time frame on the NQ, and what you have is the market doing something very, very interesting. The same way that you saw on the 1 hour time frame, it is doing here on the 5 minutes time frame. One of the first things that I said on the live stream is I want to see this low being taken out if the market is to take out previously high. So if we are going to keep pushing higher, remember what I said on the hourly time frame. The same thing that I utilized there is going to be utilized on the 5 minute, the 1 minute, because the nature of the market is fractal. When the market goes lower, some students of mine were already going long here because maybe they trusted this delivery, or maybe they saw me mark this buy side because this is the first level that I marked in the stream. looking at these highs, cleanest delivery was going to be if we take these lows out and then we deliver to these highs and then this high right here. But it just starts pulling from it higher and higher all the way to the rejection block. So the behavior in which we trade around the rejection block is what I teach. Okay, so there's something going on in here that I teach in my Volume 1 Class 4 that my students know. And if you're watching this, you should be taking notes, okay? So go back to Volume 1 Class 4 and take notes of what took place in here. When we drop down to the 5 minutes, you can rapidly see that we are doing the same thing here. So we are leaving, swing low, and then all the way down here you have another one, which I don't pay much attention to this one, but to this one is the one that I'm paying more attention to, okay? Because below that one, have another one right here, which is kind of in close proximity. I would not refer too much towards this one, but mostly towards something that is super close in here and is in the same price leg. Okay, so for example, in this one, this price leg started delivery higher from this low. You have another one here, and then it delivers. So when I drop down to the 1 minute, this is what we were looking at. So I was calling the market for the buy side towards this level right here because I marked it on the live stream, and I think I marked it a little bit higher. Not quite sure if it was this exact same one. It was around here. Well, let's see. It was going higher like this, gave them this bullish order block, then gave them this bullish value gap. It came in here, and it failed to deliver towards previous day high. So once it did that and started delivering lower, before the market inverts this fair value gap, I already named it an inversion fair value gap. And what we were looking for the news delivery was to target this sell side right here. So there's a part in the live stream that I say, this low right here, yes, this low right here is 100% guaranteed. I want to see this low 100%. Eventually it's gonna be low resistance. So there we go. Again, come on in Q. Not taking out my low first. I'm not even taking out the high. So, okay, if it doesn't do it, then I'm gonna think of this low pending, okay? Estaba diciendo, güey, me olvidé. Oh, everyone short.
Full port. Voy a dejar postear el video de una vez. Amaneciendo y Topstep. Ahorita creen en las últimas de Topstep. Oye, me escribió esa perra, ve.
La madre. Dime.
Sí.
In the news, is if the market doesn't deliver to the sell side before news, you could see during the news just bam towards the sell side. If it's going to spend, so for that, if the market spends up here a little bit before news, and then you could see that. So from here, I want to see if we can stay below it. If you want to see the lows, if we
then they send you an email like blah 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 activity sheet. You have to sync a contract. No, nothing else.
Verify your age. That's it.
Yeah, you have to do that.
Okay, now we're gonna pinpoint this now. Okay, so from here to here. So I said as long as it remains below the consequent approachment, and I put the arrow, didn't draw the delivery to the buy side. So I'm talking like if the market is 100% gonna go to this low, bro. It should 100% go down to that low. It should 100% deliver to the sell side right here. I now know that I shouldn't have said that because I just want to protect you from doing something reckless when it comes to trading. I don't want my opinions on the marketplace to in some way drive your financial decisions, because I am not a financial advisor, and none of this is to be taken as a financial advice, okay? This is only a crazy man in YouTube just talking about things he loves about, okay? So when the market is places lower like this, I said, okay, pay attention to this bearish value gap. So this is the bearish value gap that we were looking at. This one right here. Nothing more, well, no, actually, also the first presentation value gap. Okay, these two, and that's it. Nothing more, nothing less, okay? Nothing more, nothing less. I have nothing else on my chart But this, what you're seeing right now, is all I had. So when the market comes in here, I said, if the market does not close above the consequent encroachment of this CV, what I want to see is the market dropping. So I even put a line there. I want to see if I can get everything from the live stream so you can see. So it closes here, the market starts dropping beautifully. And then it retraces all the way back to this CV one more time. So right away, I know that the market is going to chop for a little bit. Taps it one more time. So why do I say it's going to chop for a little bit? Because after value gap that the market delivers above the 50% like this, I don't want to see that being revisited again. For a good delivery, for a low resistance liquidity run delivery, I don't want to see this CV being revisited. Now, if it comes and revisits this one more time, it does not mean it's not going to go down here anymore, but it means that it's going to take longer to deliver and it's going to spend more time inside of this range. If you go to my Inner Musings channel in the Discord, you're going to know that I teach something that is called the consolidation model, right? That's taking place right here. That's for your homework. So when the market starts consolidating around this range in between these two P arrays, my friend Axel called this high right here in the live stream as well. I want to see if I can get that. And he was looking for a closure above this one in order for us to see the delivery towards further buy side, because we are all-time highest protocol. It is very, very low probability to be calling for shorts, right? But every single day I wanted to see the shorts. And today finally happened. So once the market reaches towards this high, it does not close above it. So what do you have? A soup, total soup. It just came to these highs to visit this CV one more time and to take out this buy side. Why this buy side? Oh, remember what I told you. A swing high super close to what? Another swing high. Remember the same thing that we saw on the hourly, we saw on the 5 minute, we are seeing here on the 1 minute. Swing high super close to another, and then you have another set of swing high super close to another. See that? So if we are looking for a sell side delivery, the same thing that we saw in the beginning of the video is happening right here, right now. We want to see these highs being taken out. Whatever set of highs that we have super close to each other, we want to see them out. Because otherwise it's going to be pending business, pending levels. The market is not going to be let to trade freely if these are to be left untouched in here. So when the market was delivering to the sell side like this was something that could have delivered at least towards this low. It just came to the 50% of this week right here. Okay, to the tick, right in here. And then it came all the way back to the range to leave another set of lows. Another set of highs. So if I want to be taking a short, I cannot take a short if these highs are to be left in here. I want to see them out. Okay. So this is why I was not taking a long confidently since Wednesday, because you had those lows on the hourly time frame. So here, remember, so since Wednesday, I am not looking too long because of this reason. You have these lows in here. This just screams to me, short.
Short, motherfucker.
And every trade that I took was under this idea, under this premise. And the longer they stay here put, the more violent the drop is going to be. So now that we are here again, remember what I was telling you. None of this is pattern trading. Okay, we are not trading a pattern. We are not trading an inversion for value gap just because we closed below the bullish. We're not trading a bearish just because it's bearish. We are trading a narrative. We are trading a logic. This is what makes us different from the rest of the traders. We understand why the market is going to move or gravitate towards a certain level. We understand the reasons why. Okay, we are not just saying, okay, bearish fair value gap, short, bullish fair value gap, long. No, the bullish fair value gaps are going to fail when the narrative or price is to be for bearish delivery, and the bearish fair value gap is going to fail when the narrative or price is to be towards the higher prices, towards a bullish delivery. And I have shown this many times on my YouTube channel, in which I mark the bearish fair value gap and I tell you this is not a bearish fair value gap. and the market just respects that and keep pushing higher. So the same thing for the sell side. Once the market lifts or cleans these lows right here, okay, I'm sorry, these highs, cleans them out, then it drops lower and leaves the CV. Now, I wanted to take a short in here, but I was making the list for the students of today with my friend Axel to teach the classes, so I missed this short. But I was on a short. Well, I'm not going to tell you if I'm not going to show you. So I'm not going to show you. I took the short somewhere else. But then the market comes in here and then delivers to the sell side tremendously beautifully. And my students knew that I was looking at these lows. And my students knew that this low was 100% to be tagged. 100%. I wanted to see this today 100%. So the market displaces with the speed and velocity just like an animal, goes lower, and this is the low, the current low of the day, just displaces through that. And now it's going to visit all the levels that were pending. Remember? All the levels that have been left and engineered for the market to take later on Wednesday. So you know that if you are looking for a target to get hit, the market sometimes, well, most of the time, is not just going to go towards that target, but it's going to go to that target and pass it, right? So we're looking at these levels. So the market takes that one out, bam. And in the first pending level, what does it do? Start spending a little bit of time. So why does the market do that? It's not because it is getting ready to reverse higher. No. In the normal way of the market, okay, in the order of things, let's think of it as the market goes towards the first checkpoint, and now it's going to spend a little bit of time here just to gather energy to extend itself for another whatever range that it did up here for the sell side. Okay, so let's do this. So let's say the beginning of the move took place up here towards this low. Okay, so this is the range for the first drop. It's going to spend a little bit of time in here just for a consolidation before a continuation. This is not the market getting ready to go long now. No. This is the market getting ready to make another price leg of the same size or around the same size in the same direction. So the market, I'm going to grab this price leg. I want to put it here. See that? So that's what it is. In case you couldn't enter anywhere in here because it didn't give you a chance of doing so, you can look for something after this consolidation. Okay, so that's a little tip. From here to here, you can try to find another measure move after the consolidation takes place. So how do you know the consolidation has taken place? Okay, so if we're to keep pushing lower in the same direction to the sell side, you want to be looking for a CV, which is a very short value gap, or you want to be looking for a swing high being taken out. So in this case, well, I was looking at this week, but I think that is too complex sometimes. So you zoom out and you can find a higher time frame P array. So you have in here a very short value gap. So let me mark this very short value gap. That's a CV you see, very short value gap. The market comes in here, touches this by one tick or so, kisses it, and then it starts delivering. Something for your notes. I don't expect the market to fully close or to even reach towards the consequent encroachment or the 50% of this very short value gap when we are in a hurry to deliver towards the sell side. How do I know, Mr. Witness, if I am going to be in a hurry to deliver towards the sell side? Anytime you had these set pending levels that I told you are low resistance liquidity run, and when you are targeting something that is low resistance liquidity run, you don't expect to see the consequent encroachment of the CV getting hit most of the times, okay? So the low resistance liquidity run can be identified as what I showed you in the beginning of the video. A swing low that is super close to another swing low, that is super close to another swing low, and that is super close to another swing low. When you have something like this gathered, then the delivery towards this liquidity, I expect to be very, very fast. And if I have a CV here, I'm going to expect that to be a NIOFET. A NIOFET is only a partially tap into a CV. So I have a template around here, NIOFET. That does not reach the 50%. You see that? So that's what I'm looking for. And then I want these lows out. So in here, let's say you're afraid of this because you've never traded something like this before, and you see the market being very, very, very volatile. It's okay. The way you understand this also is the market taking out the swing high. So it takes a swing high, which is the 5-minute CV, takes it out, and then it finally delivers lower, like this. Bam. Okay, it comes up, touches this weak low by a tick, which is a bearish breaker, touches it right there, and then delivers lower, opens, trades higher a little bit, lower, you have a CV. Remember in the other free video that I made, remember for a second the video that I made that it was for Pilgrims as well. In that video I talk about balanced price ranges, right? A balanced price range can not only be identified by using fair value gaps that are overlapping each other, but it can also be identified by understanding the right structure. So if we are to see this right here, it is true that you have a bullish fair value gap in here. It is also true that you have a bearish fair value gap in here. So these two pillars right here are efficiently delivered, are very balanced. I don't expect the market to make a retracement so deep all the way to this upper one. Why? Because if you look at the left, see this? The market has already delivered in this range efficiently, both sides. Sell side, buy side, sell side, buy side, many times. So this gap, I expect to be a breakaway gap. This is also something for your notes, volume 1, class 2 students. So a breakaway gap is the fair value gap the market is going to be leaving inside of a consolidation. When the market leaves the consolidation, that is what I want to see. Now, you also know, if you have paid attention on the inner musings, you also know about this, that there's two ways that the market can deliver from a consolidation towards the target. What is the target? Well, you don't have to break your head thinking, because I already told you, from this to this is the delivery for the sell side, okay? So you can just grab something that's going to be twice the size, so another range of the same displacement, another price leg of the same range. So I can be targeting this. Super simple, super easy. So if this is the consolidation, the first gap that the market leaves when going or getting away from the consolidation is going to be what? Even my breakaway gap or my eye of it, right? This you already know. So this is another eye of it. Remember, when looking for a low resistance liquidity run delivery towards the sell side, I don't expect the market to kiss the 50%. So the market displaces outside of this one. I expect this one to stay open. So I like to put this one for the one to stay open. Then you have a CV. The market comes in here, touches the low end. Your stop loss can be at the 50% or a little bit above it. And then it starts displacing lower. Bam. Another CV comes in here, kisses it. Bam. Another CV, I don't know if it touches it. It's perfect. It's practically the same price. And then it delivers towards the random level. Random level that nobody will know, right? And then it stops right here at a random level. And then it just keeps pushing higher again back into the daily fair value gap, lower quadrant. So what I'm paying attention to now is from the 50% to the low end of the fair value gap, right here, the daily fair value gap, is I wanted to see previous week low being tagged, okay? And when the market retraces back into this daily fair value gap, I am looking for the market to respect this lower quadrant. From the 50% of the gap to the low end, I want to see the market stay down here. So it can do whatever it wants up here, but the body should stay below this one. This is quote unquote, I know that you love this word. I don't like this word, but this is going to be your confirmation that is going to keep pushing lower. We are not looking for a reversal. We are not looking for a reversal. So the market stops right here with the bodies, displaces lower, starts spending a little bit of time, comes back up one more time because it's going to be chopping around for a little bit. This is the second kiss into the CV, into the daily fair value gap, I'm sorry. And then it delivers lower, lower. I'm looking for something very clear, okay? I'm looking for a CV that is very clear. And then the market gives me the CV. Very, very, very clear. Okay, so I again missed another entry here. But then when the market breaks lower, below these lows, I am looking to enter in this gap. So what I do is, and at this time, I am not trying to go crazy with my exit, because I know that the market has already displaced tremendously. I know that the market has already delivered a lot. So this was going to be the ideal entry, and I would have showed you this trade if I would have taken it. More than 700 points, 2%, but it's fine. I don't need to show everything. I am also human. Sometimes I miss trades. Yes, sometimes I do. So the market retraces back into this gap. So you have two fair value gaps in here, this little one and this higher one. So I am utilizing and unifying these two. So when the market comes in here, I'm entering in the low portion of this fair value gap, and I'm putting my stop loss above the high end of this one, because it has two fair value gaps and we are leaving the consolidation, which is this range right here. Chances are it may just want to come back into the lowest one and not visit the highest one. I want to make sure I am on the trade, so I want to be entering in the lowest one, but my stop loss has to be encapsulated in the highest one. Okay, so my entry is right there, and then the market just keeps pulling lower. What do you have in here? Very short block, which is a group of up close candles before the down move in here, using it as quote-unquote resistance, and then it starts pushing lower. So you have 120 points. Then my exit is right at the previous week low. So you do the math. Okay, 100 points with 9 contracts profit, and then I left one contract running because I know that the market wanted to deliver further towards the sell side, and again break even. So the same thing that happened to me on the hourly time frame happened to me here again, bro. I mean, Mr. Lucky, but sometimes this happen, and it is fine. I don't mind, because the same thing is gonna happen tomorrow and the day after. Well, not tomorrow, but the same thing is gonna happen Monday, Tuesday, next week, next month, next year. It's always gonna repeat, because it cannot not repeat. It's gonna repeat. So you better understand this now, or you're gonna be a victim of this. That the market is not moving because of the news. It's not moving because of the patterns, buyers or sellers. It is only moving because of inefficiencies and liquidity. Inefficiencies and liquidity. Also, see this low? What do you have down here? Another one. Super close to each other. So what is this now? Previous week low, which is a big pool of liquidity that is super close to these ones. So I know that this low is guaranteed. Or let's not call it like that. I know that this low is very, very high probability. Right? So this is a modest short, 10 contracts for 100 points. That looks very, very small in comparison to the whole drop, but it is enough. It is more than enough. This is more than $2,000 per contract. Okay? You don't need more than that. I'm doing this with 9 contracts. And then the market stops me on break even. Now it just comes back into the range, again to the same CV, touches it, lower prices, very short block right here. And then it just keeps delivering the same thing that happened in here. Same thing is going to happen again. And it just keeps pushing lower, CV, income pass with the previous week low, wink wink, nudge nudge. And then it just finally shits the bed. Now it is here at the other level that I gave my students, because yes, I had further levels for the sell side. And I think now all of them have been tagged. So let me cap this up. Okay, so now you know the reason of the drop. I have a saying that is stairs to heaven, slides to hell. And it is basically this. When the market delivers towards the buy side in this fashion, leaving stairs, like it looks like it's trying to leave a little stairs towards the buy side, you want to have a slide of hell. Why is that the case? Well, I already told you today. When the market leaves set of lows super close to each other in this way, another set of lows here, here, this one in here, this one we already talked about. So you have a lot of layer sales and liquidity. Remember, the opposite part is thinking that this is quote-unquote support that the market was utilizing to bounce higher. But in reality, what this is the market just preparing us for COVID lows. I would like to see that. Okay. Have a beautiful rest of the day, guys. This will be everything for today. This is how you pick one of the highest probability targets. Remember, you don't need to see this on the hourly time frame for you to know or for you to be able to capture these drops, these stupid drops, okay? What you need, though, is to look for the same logic on the 1 minute time frame. So when you look at one side of the marketplace and it looks like this, super close to each other, you know what side to target, okay? Have a beautiful rest of the day, everyone. God bless you, and we'll be talking to each other pretty soon, God willing. Bye-bye. Ooh, before I leave, I want to say that I just told you that the market moves from liquidity to inefficiency, nothing else, okay? So if the market has no other liquidity to target because we are at all-time highs, what can you target then? Yes, inefficiency. So look in your range. Do you have an inefficiency? Yes, you do. Yes, you do. Okay? So that's it. Bye-bye. I almost forget to mention this, but one of the things that I utilize to know if the market is going to have a big reversal at the end of the week is the weekly opening price. So the opening price that you have printed here, I'm going to make this one bigger so you can see it better. So the opening price that you have printed here at 6 p.m., okay, what I want to see do is the market go under this opening price Monday as much as Wednesday's AM session, okay? And then I want to see it get away from it. Get away from it and trend higher. So Thursday needs to be a continuation higher, okay? But because of this reason, and look at this, the ES is telling me a lot in here. Nobody saw the left of the chart, okay? What you have in here is the market touching back the opening price that we have on Wednesday and Thursday. As soon as I see that, the ES doing that, I know that we're going to have a big drop because we could not deliver away from the weekly opening price by Wednesday, and Thursday did not show a continuation because there's nowhere to continue towards, but instead you have a lot of liquidity down here, as I mentioned, a low resistance. So whenever you consolidate around the weekly opening price, then you can know that by Thursday, this is what I was telling you about the Thursday news or Friday earlier, because whenever you consolidate around the opening price, you have to know that you're going to have a big drop either on Thursday or on Friday. Okay, this is why I entered short on Thursday, because it could have happened that day. Now they decided to postpone that to Friday. That's okay. Stopping me on break-even on the way, but it's fine. I'm gonna get them next week. You'll see that. So that, also keep in mind of that. So that's why I have an extra chart only for this, because I am looking at that, okay? I always pay attention to this. Have a beautiful rest of the day now. Bye-bye.
From the drawdowns to the breakouts, from the red days to the payouts, now the growth project flames stay loud, witnessing that, so hold it down. Ride the wave, ES and Q, never fold, play it smart, keep the fam in view. Stack the wins, pass it on, that's the next move. Trade to live, live to trade, that's what we do. Vision in the charts, built it from the scars. Now the squad got hard, passion set apart. Build a growth project rise, yeah we aim for stars. Started from the dark, now we share the spark. Ain't about flex, it's about